Hey, I'm Abe, and today we're going to talk about credit limits. It's important to understand credit limits if you're thinking about getting a credit card. Credit limits are essentially how much the bank is willing to loan you. Usually it's something people talk about with credit cards, and that's how this video is going to be focused. Now, when you're issued a credit card, it'll come with a limit, and that limit is based on your credit report, your income. Essentially, this is how much you're able to spend on that credit card. Now, it's important also to understand the difference between the credit limit and your available credit. So as an example, my first credit card in college had a credit limit of $500. Now, if I bought $100 worth of goods, my available credit is now $400, but my credit limit on the credit card is still $500. So it's just, the difference is a key one, but the credit limit is essentially just the maximum amount that you could ever put on that card. To further that example, if you want to spend, after you've spent that $100, if you have something else that you need to buy that is $450, for example, there's no reason that you need to wait until the end of the month to pay your credit card bill to then have the full available credit of your credit limit. You can go online, for example, and pay the amount that is currently outstanding on your credit card. Like right now, I could buy something right now for $100. Later in the day or whenever the bank registers that purchase, I can go online, I can pay that amount off, and then my available credit will go back up from $400 to $500. And I'll be able to then make that larger purchase. And like I said before, the bank will be the one to determine your credit limit. Now, this is not the bank necessarily looking at all of your funds and telling you how much they think you can afford. That's sort of what's going on. You shouldn't view your credit limit as a free check for that much money, because it's not free money. And this is where my personal advice to you comes in, is don't view your credit card or any of your credit limit as a source of free money or even as a source of debt. Ideally, you're using your credit card just to pay for things that you can afford and things that you can immediately then pay off. Credit card debt comes with an incredibly high interest rate, so it's not something that you want to carry over charges from month to month and not pay off your bill. So my advice is don't spend with your credit card, if at all possible. Don't spend more than you can actually pay off in that month. And this is where having a really tight grip on your budget comes in handy. Knowing how much money you have available to spend, and what the next month will look like, and so on and so forth. So that you have that confidence that when you spend $400 on something, you know how much is in your account right now and free and available to spend, that you can afford to pay that off before all of your other bills come in, and that will be a sustainable use of that money. Generally speaking, a higher credit limit isn't better than a lower credit limit. All it is the amount that bank is saying that they think that you can sort of manage based on your credit history, based on your income and all of these other things. So I may have been I wasn't, but I had no income when I was in college, really. Only a little bit from jobs on campus and over the summer. So maybe I made $5,000 in a year. And so as a result, $500 on my first credit card. I had no credit history. There was nothing to prove to them that I was worthy of credit. So them giving me $500 or even $200 isn't their way of saying that they don't trust me at all. It's just saying that I have nothing to base their trust on, so they're going to start here. Now, as you continue to pay off your credit cards reliably, they can and often will come to you and offer to increase your credit limit. Or if you're doing poorly, say, for example, they may decrease your credit limit. It is completely at their discretion. So having a higher credit limit is not necessarily always a good thing. But what it does do, and as we talked about in the debit card versus credit card video that was on Wednesday, having a higher credit limit allows you to use less of your available credit. So if we have $500 as our credit limit, we have $500 as an available credit each month, right? Now, if I go and I spend $450 to $495 each month of that, even if I'm paying it off every month, the credit agencies will view that as somewhat risky behavior. I'm not going to tell you that that's right or wrong. I'm just saying that that is factored into your credit score, how much of your available credit you use is something that they look at. Consider that what will look good to them is to have a certain credit limit and only to use regularly a portion of it. And by doing that, you're showing that you can show restraint. You're showing that even though you have money available to you, essentially, that you're not trying to spend it, that you are a responsible user of debt, basically. And so by having a lower utilization of your credit, you will improve in the eyes of lenders your credit worthiness and generally increase your credit score. So sometimes it makes sense to allow your credit card company to increase your credit limit so that you can continue to spend the same amount that you've always been spending and just show that you are an even more responsible user of credit and debt. And in doing so, and by increasing your credit score, you will then have an easier time securing auto loans, home loans, and other larger loans. And maybe we're talking about school loans too. And with that, they will not only be more likely to give you the loan, but the loans will be cheaper. Your interest rates will be lower as a result of that. A higher credit limit to a point is a good thing. Having too much credit available to you makes you look like a risk because let's say you've got, $100,000 available credit on your credit card or as a credit limit. That sort of means that if I wanted to, I could go buy $100,000 worth of goods and then skip the country and disappear from the grid. And then they would have no way of, tracking me down or making themselves whole from what I've done. So having too much credit available to you can also be seen as a risk in the eyes of lenders. That said, using your credit card to pay for large purchases, and that can be appliances like dishwashers or ovens and laundry machines, I ended up asking for an increase to my credit limit so that I could pay for books and tuition when I was in business school. It was very expensive, and that was a method of payment available. And if I used a credit card, I could then get the 2% back that I get on that credit card. And for really large purchases, regardless of what they are, 2%, that's a lot. It could be hundreds of dollars. It could be more, it could be less, but that is free money if somebody's willing to give you money back. So I ended up calling the credit card company and saying, hey, I've got this one-time expense that I would like to use your card for, but my credit limit is too low. Can you bump it up to this? And maybe it's even just temporary. And I think I told the gal this on the phone. If you could just bump it up by $2,000 or $5,000 or whatever it ended up being, just for a month, 2 months, that'll allow me to use it for this purchase, and then you can bump it back down if you would like. And they looked over my numbers and they agreed to bump it up. And I don't think they went back and reduced it, but it behooves them, or it benefits them, for you to use this card for as much as possible because they're getting a small percentage every time you make a purchase. So using your credit card for large purchases is good if you can benefit from the rewards, kickbacks that are associated with that card. And additionally, because credit cards have their own insurances, warranties, and general protective services that come along with them for your purchases, if you use them on large purchases like appliances, those appliances may fail after the limited warranty that comes with it from the manufacturer. And your credit card may be able to then protect you beyond that and offer more of a value to you. So having a bit of a higher credit limit allows you to consider these things and allows you to benefit in other ways. And then lastly, if you need to make a bunch of purchases like I did for books and tuition and other things, it's smarter from a credit sense to have a higher credit limit on one card than it is to have as many or a bunch of different credit cards with lower credit limits. So if you are faced with that and you need to make payments to a number of different sources and the credit limit on one card isn't enough for it, and you're thinking maybe I'll just get a bunch of other different credit cards and I'll put money on all of those, don't do that. Talk to your credit card company, see if they will raise the limit on the individual card so that you can pay for everything there. And then again, you can just pay it all off because you've looked at it and you've decided that you can afford it and you have that money available. Now, this is the way we talk about credit, and this is the way that I'm going to try to continue to talk about credit. But I acknowledge that not everybody is in a position to, when an emergency happens or in general, sometimes you need to use the credit that's available to you to survive to pay for things that are extremely important, medicine, bail, whatever. So I acknowledge that life has a way of forcing us, or seeming to force us down a path at very least, that makes us make decisions that are going to make the future of our lives more challenging and more difficult. So I acknowledge that, and that there are challenges ahead of us. But if you can, in the normal use of a credit card, if you can avoid charging anything that you can't pay for right away, you will save yourself a lot of trouble, and you'll save yourself a lot of money in the long run, because the interest rates on credit card debt are extremely high, and it is a dangerous type of debt to get into and to carry debt for. So this is what credit limits are. They're an essential part of understanding debit versus credit and using a credit card in general. So hopefully this helped illuminate things. If you have questions, by all means, hit me up in the comments below. I appreciate you being here. Thanks for watching, and I will see you in the next video.